Hello there. I'm Windermere Real Estate's Chief Economist, Matthew Gardner, and welcome to this week's episode of Mondays with Matthew. Today we're going to take a look at the economic and real estate announcements that came out last week, as there were several of note and very much worthy of discussion. And to start off with, we had the August retail sales numbers, and they were up 0.6% on the month and up 2.6% year over year. But that isn't the real story. Although you can clearly see growth pulling back significantly from where it was in May and June, I was actually rather pleased. You see, the pullback should surprise no one. Why? Well, spending in May and June was heavily influenced by both enhanced unemployment benefits and the $1,200 check that appeared for a lot of people across the country. And although growth slowed, I was actually delighted to see that it didn't turn negative. And that's important because it demonstrates a somewhat solid base upon which to build. What I see is that consumers are actually in pretty good shape. But that said, it will be interesting to watch what happens as we head into the holiday season, which, by the way, is scheduled to start really early if we are to believe comments coming from many retailers across America. Oh joy. Okay, up next is the National Association of Home Builders Housing Market Index. And all I can say is, wow. The number came in at 83. That's the highest it has ever reached in its more than, 35-year history. And for those of you that don't follow this index, any number above 50, that's positive. Oh, by the way, do you see the V? And when we look at the three components of the index, all rose to record levels, with the traffic index, which looks at prospective buyers' visits to housing developments, up by a massive 7 points versus August. And current sales conditions, as well as sales expectations for the next 6 months, are also looking extremely good. But before we all get carried away, there was a negative that was discussed in the report, and it's regarding lumber prices. Now, regular followers of mine will know that I've spent years moaning about the cost of building homes, but nobody could have expected to see this kind of increase. So what is going on? Well, because of COVID-19 induced supply chain issues, and now with wildfires raging across the West, lumber prices have gone parabolic, with the cost of lumber rising by a massive 170% over just the last few months. And this remarkable index has done one thing. It has added approximately $16,000 to the cost of building an average-sized single-family home in America. And I would add that one of our local companies, Weyerhaeuser, they own about 2.9 million acres of timberland across Oregon and Washington, and they're now saying that the fires have reached some of their land. So I find the likelihood of costs pulling back anytime soon to be remote. Okay, next up, building permits and starts. Although the total number of permits dropped by 0.9% between July and August, I was really happy to see single-family permits jumping by 6% to an annual rate of 1.036 million units. Now, and this is really good news because it's the first time the number has broken north of 1 million since May of 2007. And if we look at housing starts, they showed a similar pattern, with total starts down by 5.1% month over month, but single-family starts up by 4.1%. Starts rose the most out here in the West, where they were up by 23.4%, and in the Midwest, where they were 20% higher. Starts were lower in the Northeast, where they were down by 21.9%, but that's a very small market, and they were also 3.8% lower in the South. Now, I do want to bring your attention to a little discussed number inside the monthly report, and it's a number that looks at the number of homes actually under construction. Now, you may ask what the difference is between home starts and homes under construction, and it would be a good question. The difference is that starts only look at homes where footings have been poured, but that's it. While homes under construction, they're ones that have progressed beyond foundation work and into framing. But at the same time, the home is not complete. And there were 521,000 units under construction in August. Now that's up by 2% on the month, but it's only a meagre 1% higher than seen in August of 2019. As I see it, the report shows continued strength in single-family development, which is rather unsurprising given strong demand, but construction activity hasn't risen to the levels I'm looking for. And given what we're seeing regarding costs, well, I do wonder if we will see new home development increase significantly in the foreseeable future. You see, any cost increases will need to be passed on to the home buyer, and I'm not sure how they're likely to react. Finally, we got the provisional September number for consumer sentiment, and it was a good one, with the overall index coming in at 78.9, and it's now at its highest level since COVID-19 hit back in March, when the index was measured at 89.1. And most people don't look too closely at the details, but there are two components to the index. The present conditions index, which measures how we're feeling about the economy today, and the future expectations index, which gauges how we believe the economy will be in 6 months' time. And as you can see, both rose quite nicely, but the greatest increase was seen in the expectations index. And this tells me that we're fairly confident that by next spring, we should be in a pretty decent position when it comes to the US economy. So there you have it, my thoughts on last week's data releases. And on deck for this week is data on existing home sales and prices across America in August, and that comes out on Tuesday. The FHFA Home Price Index for September, that comes out on Wednesday, and the August data on new home sales, that comes out on Thursday. And all of these will be really interesting to look at, so I hope you'll join me again next Monday when I'll give you my take on all the latest numbers. As always, if you've got any questions about this week's data, or if you have a topic you'd like me to take a look at, I'd love to hear from you. But in the meantime, take care out there, and I look forward to seeing you all again next week. Bye now.